Hi everyone, thanks for joining again. Yeah, so no crazy like slides or anything for this one. Just another Q&A. So I do these every quarter, or try to. This one's obviously a little bit late, partially because of my my exams and stuff. I wanted to focus on that before I did my Q3 report and my Q&A session, just because it takes quite a lot of time to prepare for them and stuff. Get everything set up and make sure that everything on Twitch is still working correctly, all the rest of it. And I needed all my time for studying anyway. But yeah, basically, the gist of this is that anyone can ask a question in the chat. I'm not going to answer the chat questions first before you go crazy. What I'm going to do first is go through the questions that I've already received on eToro. So there's no point in going to queue another question on eToro now, because I'm just going to read the ones. I'm going to refresh the page right now. And whatever questions are on there, I'm going to read those and answer those first. And then after that, I'll answer the questions from chat here on Discord. Before I start though, I just want to make sure that everyone can hear me okay, because after uploading the last video from my performance report onto YouTube for Q3, I thought the sound level was a bit low. So I don't know, put an emoji in the chat if it's good or something, and then I'll start if that's good with everyone that's here. Let's put it on this screen. I'm just going to refresh here. Okay, everyone's saying the sound is good, so an emoji, love it. Right, yeah. So I'm basically just going to go through these in order. The first one, the first question I got is obviously about copying and adding funds and stuff. This is the question I get asked the most. If you want to read my proper kind of answer to it, then you can head on to this thread, and I've actually linked to a post I made a few weeks ago about it. About adding funds, but someone here has summarized it quite nicely. So the question here is, when would be the ideal time to add more funds so I am in sync with your percentage gains? And basically, because I'm copy blocked, you can't copy with open trades anymore. So that means that when you add funds, those funds are added kind of to your copy. They're waiting for a new position to be opened by me before it'll copy any new trades. So only trades that I make from that point forward will slowly be copied by you. So because of that, and because the funds are still assigned to the copy, that means that your returns will be essentially like a dimmed down version of mine until all of those funds are allocated. So if I make plus 20% in a month for some crazy reason, and you added funds at the start of that month, and let's say that you doubled the amount of money you're copying with, then the chances are, and again, it's always kind of rough because I'm always opening new trades all the time, but roughly you would only probably gain around 10% that month, if that makes sense. But as the time goes on, then you would be copying more and more trades, and you slowly get back into full synchronization with my portfolio. So the answer to the question really is that there is no good time or bad time to add funds, because whenever you add the funds, they will always wait for the next trade. And if I'm opening a trade, or if I'm refreshing a trade even, then that means that clearly I'm still bullish on that trade. So you're buying it at the exact same price as me, which is a good thing. But it just means that you have to wait a long time before all of those funds are actually allocated to trades. So generally, I guess the rule is, if you want to add funds, then add funds. You can do it every month if you want, every 6 months. You can do the same with removing funds as well. The same thing pretty much happens for removing funds, really, in that it will cause some desync. But yeah, there's no real good way or bad way of doing it. It's not perfect, and your stats will differ as it takes time to catch up with my portfolio. But eventually, it will catch up and it will resync again. So I wanted to get that question out of the way right at the very start. Okay, so that's that one. I'm periodically adding funds to your copy. I understand you rotate all positions every 6 months approximately. What frequency of adding funds do you advise? Yeah, I mean, so this is this has got a similar vibe to the one above. Yeah, there really is nothing that I can advise really. The one thing I would say is that I would try and do it less frequently if possible. So, maybe every quarter or every 6 months or every year. But I would say that doing it every month is probably a little bit unnecessary. Um, but it depends, if markets are really volatile, then the chances are that I'll be trading a little bit more. So you may end up kind of syncing with me more quickly if you add funds just before a really volatile period. But again, ultimately it doesn't really make too much difference. The real key is making sure that you're happy with how much you have got set to copy me, and that you're well diversified. I don't advise anyone copy only me. I think that there's all sorts of other investments that you should have out there. And obviously, none of this is financial advice, right? Because everyone's scenario is completely different, and I don't know those scenarios. So, you kind of have to decide that for yourself, or even seek out someone else to do it to help you come to that conclusion. Like a financial advisor or whatever. And you've got to look at what your income is, what your outgoings are, where else you've got money invested, what is your goal, what's your time horizon, what's your risk tolerance. Do you plan on buying a house or a new car? Are you getting married soon? There's so many things to consider that are specific to you. So I really can't advise, when is the best time or the worst time, or how much to add or how often to add, because I just don't have the information to really do that. Okay. So yeah, hopefully that answers that question for Marco123. We all know that Tesla Motors is overvalued, but do you think it can maintain its current stock price, excluding any more events like Musk selling off this week, or do you think it will fall back to its intrinsic value? Well, I mean, first, I guess I'm slightly kind of triggered by the word intrinsic value, because I don't really believe that intrinsic value is something that's calculable in any way. Um, you know, the way stocks are priced, they're always pricing in optimism of the future of some sort, or pessimism sometimes. But the point is that they're always trying to price in whatever the most likely scenario forward for a particular stock or a cryptocurrency company, whatever it is. It's always trying to price in the future to some extent. And like, it varies how far in the future something will kind of price itself in. But generally, people struggle to see much beyond a year. So that's the kind of thing you're looking at. So I mean, I do think that Tesla is overvalued, but to be honest, I think Rivian is a lot more overvalued at the moment. And after the recent sell-off, Tesla is less overvalued. I think probably for me personally, I'd be looking for like 700, 800 as a good entry point to Tesla. Uh, if I were to go for it, but I also think that for me personally, the ESG side of things doesn't look amazing to me. And I do think that there is increasing competition with Tesla, not so much in terms of the volume of car EVs they can get out and even their profit margins on those. But I do think that the battery kind of landscape is slowly showing signs of catching up to Tesla. I also think that that's becoming less of a problem just as the industry generally improves. Once you get past 500 miles of range, does it really matter if a Tesla gets 520 and your car only gets 490? Is that really going to be the decision that changes consumers' minds? So Tesla will have to make sure that they stay on top of the software side of things, which is again, they have an advantage there as well, right? But generally, I think Tesla is still a really good stock, and I do understand that why so many people are bullish on it. But at these valuations, it's not quite right for me, I don't think. I'd much rather take Ford, just simply because the problem is that when you compare Tesla with the likes of Ford or even some of the other EV kind of startup stocks, like for example, let's say Arrival or Workhorse, even, although I don't really like them that much, or Fisker. There's absolutely loads of them. When you compare it to the valuations of all of these, the risk to reward just looks so much better for a lot of those small bets. You could take a small position in all of those bets, understanding that some of them are not going to make it, and you would probably do better, I think, and perhaps even have a slightly better margin of safety. Although I think that is starting to change. So that's kind of my view on Tesla. What's its intrinsic value? To me, maybe 700 to 800. If you want to call that an intrinsic value, that's what I value it at. Purely because, as I said, I think they're pricing in a bit too much optimism with Tesla, and I do think that as the technology around EVs, the infrastructure for EVs continues to improve, they're going to struggle to maintain the advantage that they have, and they will start to kind of lose market share relative to competitors. Okay. Where do you see Plug Power and other hydrogen energy players in 5 to 10 years' time? Any thoughts on inflation and possible market crash? Thanks. Okay, so it's kind of a few questions in one there. So Plug Power specifically, I think they're one of the leaders in the hydrogen space, to be honest. Just generally, they're involved in all sorts of stuff. They're involved in, obviously, projects for storage of hydrogen. They're involved in projects of hydrogen refueling stuff. They're involved in projects involving the kind of energy storage solutions using hydrogen for grid storage. They're involved in kind of the reverse of that, which is generating hydrogen from energy such as like wind and solar, for example. And they're pretty well kind of spread out through the world. I mean, they're kind of US and a bit of Europe centric, but they are one of the more global names in the space that is a pure play of hydrogen, really. Whereas a lot of the competitors that are widespread around the world, such as Siemens and such, some of the bigger industrial companies, they obviously do a lot of other things. So you're kind of diluting what you're investing in a bit there. So that's one of the reasons I really like Plug. I mean, Nel is the other one. I would say that I really like Norwegian company that makes the electrolyzers, which basically turn water into oxygen and hydrogen. And I mean, oxygen. This is the other thing about electrolyzers. Oxygen is a very in-demand product as well. So, it's quite a nice market there, I think. But yeah, whereas Plug tend to actually kind of build the broader, bigger system, whereas Nel is really just focused on a much smaller area. In terms of hydrogen overall and where it fits in, I've discussed this quite a few times. There's almost too many use cases to list. I think we're starting now to really witness the decarbonization of steel and glass even, I think is going to be around the corner as well. Where glass products and steel products are just going to get rid of the coal that they use for the coke, which is essentially what's used for the heating process and manufacturing process for steel, and replacing that with hydrogen. And hydrogen is really the only way of doing that. You cannot build a furnace that is powered by electricity, for example, that just comes straight from wind or solar, that ever gets hot enough for what's required and really does the job. I mean, the coke's used in more ways than just that. It's a bit more complex, but hydrogen really is the only way of making those things more sustainable. And the sustainability that's gained from it is really substantial as well. It's something like 96% reduction in emissions for steel. I'm not sure what it is for glass off the top of my head, but I would imagine that it's not going to be quite as high as that, I don't think, but it's still going to be pretty high. So that's one thing. Hydrogen is used loads in just general household products. It's used in things like toothpastes. It's used in all sorts of stuff. I used some eardrops to fix a blocked ear. Bit of personal health information now. This week, and there was hydrogen in it. So I looked at the ingredients and it's got hydrogen in it. So there you go. It's in all sorts of stuff in terms of household products. Outside of that, so the next, the really big area is probably farming and agriculture. It's used in like ammonia. It's used in all sorts of different fertilizer products and various other stuff that's used in that industry. It's used in the biochemical industry. It's actually used in the fossil fuel industry to help with refining of oil. It's also used for methanol. It's used in a lot of different ways. So there's always demand for it, and I would say that the demand is growing substantially, and that's not including using it as a fuel source or a heating source, for example. So in the UK and other countries that aren't really well designed for things like heat pumps or electric heating and air conditioning, for example, where they really have cold winters and the houses are maybe a bit smaller, then hydrogen is a good option for replacing gas boiler systems or oil heating systems, where potentially otherwise you might go for something else. On the electricity side, as I said, you can do storage. So essentially you turn, when there's too much electricity in the grid and you want to save some for when it gets dark and when it's not windy, then you can use an electrolyzer, to basically generate hydrogen, and then you can store that hydrogen, wait until you need it later, and then put it through a fuel cell to turn it back into energy again. It's not quite as efficient as something like a battery, but it is incredibly scalable. And the last thing is hydrogen as a fuel. Lots of people are like, "Oh, hydrogen's never going to be a fuel. You know, it's really bad for trucks and cars. You know, everyone who's using it for cars are stupid. Blah blah blah." I kind of agree. I think for cars, it is generally pretty stupid. There may be some edge case scenarios if you're living in Antarctica, maybe, where it could potentially be better. But in most cases, you're not going to use hydrogen for a car, I don't think. Batteries are just far too cost effective. For trucks, there is potential, but really only if hydrogen does it quickly, because, you know, battery technology will catch up, and we're starting to see trucks. We're going to see delivery vans and small localized last mile delivery vehicles coming out soon. In the next 2 or 3 years, and probably we're going to see Tesla's Semi launch within the next 2 years as well. I would think, and I think that the Tesla Semi will be a little bit restricted in terms of the kind of loads it can take. But I do think that, you know, that is going to be the sign that, okay, now batteries are here, and if hydrogen isn't established and isn't competitive by that point, I think it's going to really struggle. The good news in terms of hydrogen as fuel is that it's very, very good for trains, especially in more rural areas where electrification, long haul routes, where electrification just isn't worthwhile. So it's very good for that. It's very good for boats and shipping. Extremely good for shipping, actually. You can retrofit ships to some extent based off of what they currently use, although there is potential for wind to be used for ships as well. And it's probably the only really viable solution for aviation beyond some of the light aircraft. So, you know, your small little prop planes will probably use batteries, and there's already some of those kind of hitting the market now. But for your 787s and stuff like that, and if you go and look at Airbus's website or Boeing's website, you'll see that that's basically where they're investing all of their money is in the idea of using hydrogen as a fuel source. And it does involve totally redesigning the planes as well, because you can't fit fuel in the same kind of fuel containers for hydrogen as you can with aviation fuels. So those are kind of the areas that I see hydrogen moving into, and I think it's, you know, because it's relatively easy to transport, and because you can kind of do it anywhere within reason. I think that it's going to be one of the biggest applications are going to be in transportation, still in, you know, chemicals and fertilizer and things like that, but also in grid storage. I think that it's the most scalable solution we have right now for grid storage if we're moving towards solar and wind energy predominantly. So that was a really long answer, but I like the subject of hydrogen, so I thought I'd give a long one. So I hope that helps answer your question. Again, I will be answering the questions that are in chat after I've done the ones here on eToro. So, you know, you can queue them up if you want, and I guess I'll try and go through and ask them. Anyone who's watching on YouTube, obviously, hopefully by now you've realized that this isn't actually live on YouTube, and asking a question there is a little bit pointless. Okay. So next up, I'm going to scroll down just in case people are commenting on what I'm saying. Appreciate everything you're doing. I wanted to ask why you haven't got a position in Cardano. if you hold dot on Solana, Polkadot and Solana, you've probably already answered this in the past stream. I didn't watch, apologize for bringing it up in this case. Just curious in your thoughts on about Cardano, especially since you had a position early 2021 but didn't hold it for long. Yeah, just generally over the long term, I'm just not as bullish on Polkadot as I am on Solana, on Polkadot, on Cardano as I am with Polkadot, Solana, and Ethereum, and kind of Matic just by extension of Ethereum, really. I guess the reason is that I didn't really like the way that Cardano went about the project. You know, essentially they kind of hyped the project up for a really, really long time. I say hyped, you know, it's not like they were going crazy with marketing or anything, right? But they enabled it and they had the token trading long before it had any real utility. And the founder, Charles Hoskinson, you know, I'm not a massive fan of him either. I just think that Cardano is, while it's not like it's a bad project, I don't think that the advantages that it has over something like Ethereum are really significant enough for it to be a massive game changer. It will probably do well, it'll probably be utilized, but I just don't see it as being in the same ballpark as Ethereum, Polkadot, or Solana. So the reason that I like, for example, Polkadot, I mean, Polkadot doesn't do the same thing as Ethereum and Cardano. Everyone, you know, kind of has this idea that it's a smart contract platform, and kind of, yes, it is. But it's more than that, because Polkadot is more about connecting multiple smart contract platforms and allowing you to develop contracts that interact with all of those different blockchains at the same time. So you can, you know, have a situation where you execute a contract using Polkadot and it would interact with Ethereum and I don't know, Cardano and something else in theory. And the other thing is that I really like the founder, Gavin Wood. I saw him present Polkadot in 2017 in London conference. And you know, it kind of blew my mind a bit. It was really hard to understand. The presentation was awful in terms of being easy to digest. But you know, I realized the potential of it then, and I've been kind of waiting until it came out, and I've, you know, been waiting for it to arrive on eToro, and now it's here. And I think probably Polkadot will remain a part of my portfolio for a while yet. Solana really is, I just think, the most powerful smart contract platform that is out there at the moment. Certainly in terms of the big ones. There is potential that maybe Ethereum and some of the other stuff could surpass it at some point through patching, but generally that's unlikely. You know, projects tend to develop more quickly when they're smaller because they can afford to make more mistakes. Whereas when you get big, especially when you're a cryptocurrency and you're dealing with a lot of money, you just can't afford to make those kind of mistakes. It'll be interesting to see ETH 2.0. And, you know, the reason I still support ETH is that it's just got the biggest community and, you know, the most apps using it, the biggest ecosystems are already using Ethereum. You've got banks and stuff that are using Ethereum or forks of Ethereum on the back end to try and build their own systems. There's just a lot going for Ethereum, I think. So it would take a lot for anything to catch up and surpass Ethereum, but I think Solana is probably the most likely to do it, and Polkadot, kind of, but in a different way, could also do something like that. Yeah, I think that's it. So that's that question answered. I see you're in chat as well, so yeah. Hopefully that answers your question. It's not that I'm super bearish on Cardano or anything like that. I just think that you know, I would rather be investing in those other two names, which you actually called out pretty correctly. Those are the two main ones. I like Matic as well, a few others, but I'll be continuing to invest long term. Copying. What should be the best action plan this year end? Would I stop copying you end of year and reinvest again at the start of the year with original capital plus profit? Okay, so this is kind of a confusion about how compounding growth works. So a lot of people think this. First of all, if you plan on recopying me, you definitely shouldn't stop copying because we have no idea when that could be. You know, it's entirely down to eToro when I get you know, my copy block lifted, if that happens even at all. For all I know, it won't. I hope it does. But yeah, so if you plan on copying me, then you really shouldn't uncopy me. In fact, even if you are desperate for the money and you need it for some sort of an emergency, or you're buying your house or something, you could. I think. I mean, I need to need to test it, but I'm pretty sure that you could, instead of closing the copy, just take out like 99% of the money in the copy, leave in, let's say, $10. It wouldn't even copy any trades because that's not enough for the smallest trade sizes. But by leaving that in there, you're sort of reserving your spot to copy me again in the future. And so then what you can do is add funds to that to start copying me again in the future. So if you're thinking of stopping copying, then you should do that. But this question isn't really about that. This is about a kind of confusion about how compounding growth works. So some people think that the idea to get compounding growth is that you take profits from something and then you reinvest the profit and the original amount back into the same thing to get that money working again. If you've listened to me explain it like that, you've probably already come to the conclusion about what the problem is here, which is that if you, for example, let's say I invested in Microsoft and I invested $1,000 and it doubled and it turned into $2,000. So taking that $2,000 out, selling it, and then opening a position in Microsoft again with the original $1,000 plus the $1,000 that you have in profit, which would be $2,000, actually leaves you in exactly the same situation. In fact, a slightly worse situation because you would have had to pay fees and spreads in order to do that. Potentially even missed out on something that happened in the market while you were out of that position. So basically, there's no point in ever doing that. If you're investing in a stock or a cryptocurrency or me, unless you are changing the amount of money that you actually have invested, there's no point in doing that whatsoever. And if you're adding, then you should probably just add, right? Just open another trade or use add funds if it's copying someone or something like that. Whereas if you're taking money out, then you could understand maybe closing half of it or closing a bit of it. So I hope that helps answer the question. If you're watching this, Jaziel, probably pronounced that awfully, but yeah. And you can see someone here has given the correct answer, so I'm going to give that an upvote. And also that's relevant, so that's getting an upvote too. Can I bring my cat in? Maybe later. She's not actually down here at the moment, and the other one will scratch my face off if I pick it up, so I'm not going to do that. Sorry, that question just caught my eye. I don't know why. Next question. Inflation rates. I'm curious if/how you think the recent high inflation rates in the US and UK will impact your portfolio and investment decisions going forward. Also, your thoughts on the recent Peloton share sale announced. Thanks. Okay, so we'll do the first bit first, obviously. So inflation, I do try and position my portfolio in a way that is somewhat defensive against it, while at the same time trying to remain invested in growth, which is kind of tricky, right? Because you can invest in growth, but if there's high inflation, then that affects the rates that companies are able to borrow money at in some cases. I mean, sometimes it's a really good thing actually, because if there's a lot of inflation, then there's a lot of money in the market. Investors start running out of places to put that money because the price of everything is going up, which is what inflation really is. And that includes things like stocks and savings accounts and, treasury yields, all of that stuff, right? All of that stuff, not the yield of the treasury, but the treasury market, the prices of all of these things will be going up. And so actually that makes, in many ways, borrowing money for a growth stock better, because you can do that. Of course, on the flip side of that, you have the way that people price growth stocks is that they use a discounted cash. Well, I mean, for most stocks actually, but growth stocks as well. And I kind of disagree with it in some ways, but you have to discount future growth, right? That's what you do. So you discount that by the rate of inflation normally. And so it kind of work both ways with growth stocks. So it does mean that having growth stocks, like the end result really is that growth stocks become slightly more risky, in my opinion, when there is a high inflation environment. It depends obviously on what the underlying causes are and how that's really impacting the market directly. But as a result, it means that you kind of want to be a little bit more defensive. Again, it more so depends on what policy changes might come as a result of the high inflation, both fiscally and monetary, and stuff like that. And again, which areas the economy are being impacted. Are jobs being impacted and stuff like that. So it's it's kind of a difficult thing to really uh, figure out, like give a straight answer on how to protect against that in your portfolio. For me, it comes in a kind of effort in diversification, and really just looking at the underlying business and thinking, okay, what are the risks of this business specifically? And I gave an example on my call recently of theme parks on the update call, which is on YouTube if you haven't watched it. And the reason I kind of brought up with Six Flags was that they are at risk of things like labor cost increasing, but generally, most of their kind of value is within their assets, right? They have this big theme park that's full of static rides that stay still and just sit there and slowly earn money. Yeah, you have to maintain them and whatever, but generally, you're not shipping things, you're not buying lots of extra parts all of the time, you're not selling loads and loads and loads of goods and services that you have to change the prices of, and paying extraordinary fees to get everything shipped to you. And the land itself is just going to appreciate in value generally, because that's what land does, including even some of the rides potentially. Not so much. I mean, they tend to devalue, right? But they have a long lifespan of, maybe 15, 20 years, sometimes longer. So that's kind of a safer place to put your money, and protect against it, right? It may be that the value of that land and the value of those assets don't increase at the same rate as inflation necessarily, but it is a very, very safe place to put it in terms of knowing that it's going to be relatively stable, right? It should grow, especially because with theme parks specifically, like you can't just build a theme park everywhere. You have to get the right kind of planning permission and stuff, and it has to be in a good location to attract visitors. Blah blah blah. You get the point, right? It's a scarce type of land, and asset. So it's a good way of kind of not hedging it, but certainly removing some risk from your portfolio, which you would offset with higher risk things elsewhere. I mean, there's other ways of doing it, right? You can invest in different countries that you think are growing more, and where they perhaps use a broader basket of currencies for their transactions, or even store some of their money in different currencies, and things like that. That's another way of getting around it. There's a million different scenarios of how to kind of get around these problems. But really, it's different every time, because inflation itself isn't necessarily the hardest part to defend against. It's the risks associated with it. The areas of the economy where inflation has run wild, and maybe labor costs are too high to make business models viable anymore, or perhaps certain types of goods are just not worth the money anymore, and you can't get things that you need to run your business. So I know that's like a really kind of vague answer, I guess, but that's really all I can give you. Otherwise, I'd be here all day talking about different scenarios and examples. So uh, I guess that's what I'm going to stick with for answering that part. For the second part about charlatans, Peloton shares. So Peloton are issuing out more stock. If you recall, anyone who's been part of my Discord, or anyone who has so I hosted a live kind of call on my Discord when I was looking through Peloton's earnings, and I've also talked about it relatively extensively on eToro. I think I even mentioned in the post I made about 3 weeks ago now, I think Peloton needs to raise more capital. I probably would have preferred it if they did it through debt, but it depends on what kind of rates they're going to get. But I think debt probably would have been a better option. But even if they're doing it through issuing more stock, I still think that it's completely necessary for the business to continue. So I totally understand why they're doing it. In terms of what it means for the price, yeah, I mean, I think we're probably going to hang out in this range for a little bit longer. For me, next quarter is really going to be the one that's important in deciding, the future of Peloton. They really do need to start delivering soon. And if they don't do that, then they're in trouble. But really, the thing is, as I said in my posts, right, they just need a longer runway, and they need more money because I still believe that the only way they can be successful is by continuing to be very aggressive and to expand rapidly into new markets, to build out their factory that they're doing in the US. I think it was in Ohio, from memory. They need to build that stuff out, build out their supply chain networks. They need to, push into foreign languages and stuff, which they have started to do. And hit new markets, and they need to take the hit ultimately that the hardware, and especially with shipping costs globally at the moment, is going to probably result in a loss for the company in the short term. But it's all about getting that subscriber number up, because the subscribers are where the long-term profit really lies in this company. So that's what they need to do, is they need to expand, and expanding costs money. So I'm actually really happy to see them take this action, because it means that they're sticking with their guns and what they originally said, which is that they think the best way of growing is to be aggressive. Yeah. So that's that one. Give that a like. Oh, that's showing who liked it. Sometimes I forget how to use eToro, apparently. Jamie, what's your opinion on Telos as an investment opportunity? That's interesting. Do you think they have the capability to break in the top 100, top 50, top 20 coins on the market following the recent release of their EVM? The short answer is no, probably not. Maybe the top 100. I really like Telos. I liked Telos since it was announced, actually, very early, and I was one of the recipients of the airdrop on Telos. And I've met a lot of the team from Telos. I've met Douglas Horn. Telos, for those of you that aren't aware, let's see if I can find it. Telos is a cryptocurrency that was a fork of EOS a long time ago. It's not on eToro, but I have talked about it quite a lot on Twitter and things. Basically it's a totally different kind of political and ideological stance from EOS. So EOS was very libertarian, and Telos is actually kind of I guess like market socialism kind of thing. It's much more in between. So, for example, they have a cap on whales, and if you have too much money in balance, then they can take it away from you and stuff. It's very democratic, kind of run cryptocurrency, and I've liked it for a really long time. I was in at the airdrop, and I actually sold some of my Telos about here on the chart. So that wasn't a great move by me. I'd been holding for such a long time that I kind of gave up around here, and then I eventually bought back in, and I've still hold some Telos today. So a full disclaimer: I am a holder of Telos as a reasonably small part of my crypto portfolio outside of eToro. Obviously I wouldn't hold it if I didn't like the project. Do I think it's going to be a top 100 coin? I hope so. I really hope so, because I think that they are a really great project to build on. But I'm not convinced that they will. I mean, at the moment, their rank is what, like 200? Okay, not even in the 200s, 322nd. So they're kind of falling behind a bit. Well, it's not so much that they're falling behind, right? But it feels like they're not making progress. It's very hard to break through unless you have some really revolutionary technology. And the EVM is definitely a good step, right? But when you compare what Telos offers to what Solana offers, it's debatable over which is better. Telos would be better for some applications, but Solana has just got the scale and the community behind it. So Telos, it's maybe an okay kind of outside bet, but I certainly wouldn't make it, a really major part of your portfolio. Even though I love the team and love the kind of stuff that they're doing, it's still a very risky thing to be investing in. And just while I'm here, I figure I'll mention it because there's another fork of EOS that I really like, which is UOS Ultra. And you can actually see that their charts are kind of similar in some ways. These guys actually are focused on the gaming side of things, and some of my favorite like personalities and developers and I guess thought leaders, if you want to call them that, from EOS moved into this project, and they've got backing from a lot of really big game companies and a lot of expertise and stuff, and they're basically trying to build like a decentralized version of Steam / Microsoft Game Store or the App Store type thing for everything gaming related. So pretty cool project. Again, they're also quite small. I also wouldn't go mad with them. This isn't like a recommendation. You don't have to go out and do this. I understand that a lot of you won't even bother trading anything crypto-wise outside of eToro. And I understand that. And if you feel uncomfortable, then definitely don't do that. But this is one of the projects that I think could be worth looking at if you are, looking at cool projects, even though the chart looks, pretty, you may not want to buy at these highs, right? It doesn't hurt to buy a tiny bit of exposure if you think the project is right for you. So as always, like I am not, watching this video does not count as research. You have to go out and look at these things yourself before deciding to take on any investments like that. So that's that. Next question. Let's see. Which one did I read? I read this one. What would you like to know? Would like to also know. Would like also to know. I read that wrong about 6 different ways. Your trade plans, exposure, allocation in terms of stocks, crypto trading, or will this be the same on your current portfolio? Okay, so I think they're trying to ask about the mix of stocks and stuff. They use the word exposure though, which is interesting. So I just want to briefly address that. Right, you can be exposed to the market with more money than you have in your portfolio, right? And you do this using leverage products or leverage directly, or some other forms of derivatives can do this in many different ways. There are some popular investors that go up to 400, 500, 600% even exposure, which means that they effectively have got 6 times as much money as is in their portfolio is invested in the markets. I tend to think that this is reasonably dangerous, and so generally I stick to within 110, 120%. I say generally, sometimes there's some pretty exceptional circumstances, and if you're if you're using it as a hedge, then you can afford to go like 200% and be fine, for example. And also, I mean, if you're using stop losses and things, then you can be safer when going higher as well. But really, after 200%, it starts getting really risky, in my opinion. But yeah, so generally, most of the time, I'm going to be sitting between 110, 120% exposure to the markets. In terms of if that's net long or short, then mostly it's going to be long. And then in terms of the split between different assets, I very rarely invest in commodities directly, but I have done it a few times before when I've seen good opportunities. So it really comes down to stocks and crypto. And for stocks, I'm probably going to be sitting at 75% or so as an absolute minimum. And that's assuming that maybe I have other things in there, like some indices or ETFs or something else. But realistically, crypto is only going to make up a maximum of 15%. There may be some crazy circumstances where it goes a bit beyond that for a few days. But generally, for crypto, I'm going to keep it between 10 and 15% most of the time. Sometimes it'll be lower, down to 3 or 4%. Sometimes it'll be higher, up to maybe 17% or so. But really, this comes from my experience from 2018 and from being in crypto a long time. And as the volatility diminishes and the markets mature more, then maybe that will change. But for the time being, I think those are the kind of ballpark numbers that I'm looking at. So on average, I'm going to be 85% to 90% invested in stocks and 10 to 15% invested in crypto. And that's lumping in some of the other stuff with stocks, really, like the ETFs and stuff. Seeing loads more questions in the chat. I will get to them eventually. We're almost done with this. Okay, we're not. Well, we're almost done. Yeah, we're getting there. About halfway, let's say. What are your thoughts on Loopring in terms of the tech and crypto as well, the hype behind it and GME? Yeah, I mean, weirdly, Loopring was one of the stocks that I really liked in 2017, 2018 after their ICO. I talked quite a bit about if you probably, I'm not sure actually if I was talking about it on YouTube at the time, but probably if you went back and watched like every video I put out through like 2017, 2018, you'll find somewhere me talking about Loopring quite positively. Or same on my Twitter, I guess. You could probably find me talking about it pretty positively there. I've always liked Loopring as a technology, right? So it's essentially a liquidity sharing tool for different platforms and stuff, and a way of increasing liquidity when trading. I actually haven't looked in. I must admit, I haven't looked into the specifics of how they work with GME. I understand that GME is like listing itself using Loopring somehow. Maybe there's some new stuff in Loopring that I don't know about. I haven't looked at it in a pretty long time. But yeah, I mean, it's done really well. I don't know if I'd necessarily want to invest in it now. You know, I can't really comment on it too much because of the fact that I haven't really looked at it too much. I don't own any Loopring anymore. Haven't done for a few years, sadly. I wish I still did. But yeah, I guess that's my view on it. You know, it was a project that I really liked at the start. I haven't really looked at it much since then, at least not for a couple of years. So I can't really give any big insights into it. But I did used to like it, so you know, maybe it's improved. Maybe it stayed the same. Either way, you know, worst case scenario, it's not the worst thing that you could put your money into, probably. Well, yeah. Okay. So this is translated, so hopefully it's translated well from Deutsch, from German. What do you think of the forecast of some economists and financial experts on the subject of a stock market crash in 2022? You read a lot there, also in relation to the high inflation, with the risk that this can turn into hyperinflation. In addition, the ultra-loose interest rate policy in the US can no longer be sustained, which also entails fairly high risk of a crash. Many banks are also in financial trouble. What are your plans? Do you have any information about this? How would you react in the event of rapidly gathering storm and structure your portfolio? Okay. So I think if you go on to, well, it may not be the case because probably they delete them, I suspect, but there is a very sizable chunk of the investing community that are what I would call perma bears, meaning that they are permanently bears. They're always bearish. And they have been talking about market crashes from 2016, 2017, 2018. 2018, they were jubilant, in fact, because the market was relatively flat that year, slightly down even. 2019, 2020, 2021, every year there are these doom and gloom predictions that the US is going to go into hyperinflation, that the debt ceiling will not be raised, for example, that it's just impossible for society to continue functioning in the same capital markets as they are as they stand. That 2008 kind of crisis is coming just around the corner because you know the same guy who was featured in The Big Short, who you know called the 2008-2009 crisis has been shorting X, Y, and Z, and you know people are saying Evergrande is you know going to be the start. I mean that in itself is another good example, right? People have been talking about the China housing bubble since probably about 2015 or something, maybe even earlier actually. I've been aware of it for you know years and years and years, and we've all seen the videos on the internet, and if you haven't, you know it's kind of interesting to look at, right, where you could just search these ghost cities that they popped up in China, and people are saying the same thing about that, and you know maybe we're finally starting to see that collapse, but If we are, it's certainly not happening at the same pace that it did in 2007 and 8 and 9 with the global financial crisis. Right, when Lehman Brothers went under, it was a few months before really the entire global economy was in deep trouble. And yet it's been several months now since the Evergrande situation happened, and we're not in that same situation. It's kind of a similar story with inflation, right? People think that just because you've got inflation rates of, let's say, 4% in the US, I know they're a bit higher than that at the moment, but um, even if you've got inflation like that, there's a really big difference between like 4 or 5% inflation rate and hyperinflation. Hyperinflation would mean something like 15% plus. Really, would be what I would consider to be hyperinflation. And hyperinflation is incredibly dangerous, right? If you get into that situation, it's very hard to correct it. And the closer you get, the more dangerous it becomes that you could end up in hyperinflation. And it's kind of like a snowball effect, right? Once you're in it, it's very hard to get out of it. It just rolls downhill and gets bigger and bigger and bigger. But again, people have been saying these things for a really, really long time, and I just don't see it happening. I look around the markets today, and it's like the people who say the market's massively overvalued, it needs to sell off. And yeah, price earnings ratios generally have gone up. But if you actually look at, for example, the P ratio in the S&P 500 and what's driving that up, a lot of it comes from really speculative stocks, such as even, for example, GameStop, right? GameStop in itself, because of the kind of meme stock that culture around it, and like this hold until it becomes a fully profitable, fully functioning company again, despite the big guys on Wall Street. That means that the valuations on it are totally out of whack, right? And those valuations are used in the valuations for all sorts of different indices. And the same is true of Tesla, right? A very large chunk of investors would say that they think Tesla is overvalued. Or Rivian is a brilliant example. Rivian has currently got zero revenue. They're now worth something like 140 billion right now. Yes, they're up to like 160 billion, with no revenue. So all of the price earnings information, and all of the little metrics that come out of that would also point towards the economy being completely unsustainable. But when you go and look at the more boring companies, if you just literally go from A to Z and look at all of the metrics around those companies, they're nowhere near like being crazy overvalued. Maybe they're like 20% higher than they were a few years ago, in like, let's say 2017, but that's it. So yeah, there could be a correction. We could see a 10% correction, a 20% correction, maybe even a 30% correction, but that's not a crash. And 30% when, for example, if you're copying me, then you're up 35% so far this year. It's kind of meaningless. So it's not that you shouldn't be aware of the risks and that you shouldn't be watching what's happening with inflation. It is very, very important, and it really makes a big difference on the type of companies you should be putting money into. But the general risk of it turning into hyperinflation, I think, is still relatively low. So I really wouldn't be too concerned about it. In terms of how I'd react, I mean, it's hard to say. It depends how it happens. Probably the most dangerous way of it happening, that would be the hardest for me to react to, would be if it generally kind of very slowly sloped up. With inflation going, maybe from 5% to 6%, 6% to 7%, because what happens is you kind of you get kind of numb to how high the number is, and maybe you don't pay as much attention to the risks. So that would, I think, be the most dangerous scenario, because I think a lot of the market would kind of fall into, well, it's not too bad yet. I'll wait until 8%, or I'll wait until 9%, and then I'll start getting out. So, that's a risk, I guess. But generally speaking, in terms of reacting to it, it depends how it unfolds, right? Some things you just will not be able to predict. Nobody can predict everything. Some things are more predictable. I managed to predict what happened with how the markets reacted to COVID relatively well, but I didn't predict the reopening quite as well as I could have. I could have positioned into that a bit better than I did. So it's hard to say, but all I can tell you is that I'll be watching and I'll be trying my best to make sure that I stay ahead of it, and that I do react if it happens. So hopefully, again, I hope that has shed some light on your question. Thank you for sending it from Germany. I think it translated okay. Yeah, it's not something that I would build too much of your portfolio around. And I guess just as one final point, and you will have heard lots of people say this, but I'm going to repeat it anyway because it's worth saying, right? If you let's say you became bearish in 2017 or even 2018 after the market finally had a really pretty bad year. If you have not invested in the stock market, then you had been holding gold all that time, you'd be sitting on a really heavy loss in gold. I can't remember what the price of gold was at the time. I'm not going to look it up on here. But I think you would have made a loss on gold, and the potential gain that you would have had just from opening a position in the Nasdaq or in the S&P 500, you'd be talking hundreds of % profit. You could have doubled your money by not listening um, to the fear, I guess. And it's not that's not to say that like you're scared, right? You should be scared of potential bad events and bad outcomes, but you know you have to kind of go against that sometimes, because when the market generally is scared is normally the time you want to be investing. Yeah, that's I guess that's all I'm going to say on that. Some crypto related questions. Are you still bullish on Flow? So Flow I've talked about a lot. It's another cryptocurrency. Let's go to CoinMarketCap and find it for you, just so you can have something to look at while I'm talking about it. So this is Flow, and I picked this up basically here, right when it launched. Someone else alerted me to it. Still owe them some thanks, I guess, for alerting me to it. And as you can see, it's had a bit of a rocky ride over time, and I think it actually currently is outperforming a lot of the major cryptos. But it has made its way into the top like 50 or so on CoinMarketCap. Currently 47th. Yeah, I really like it. It's a good play on the NFT space, I think. There's a lot of really good, talented people behind it. There's a lot of really big investing names behind it. There's a lot of big brands that they are working with. For example, the NBA. They're working with some of the really cool kind of like kids brands around books and stuff. I don't know the MotoGP. There's a lot of really big, especially in sports, a lot of big brands that they're working with. Warner Brothers, I think, are partnered with them. And so yeah, I think this is a really good platform. It's basically a blockchain dedicated really towards NFTs. And yeah, I like it. I think it's a good project. They released a lot of new tokens recently, which is why it shot up into the thing. So you can see it here. If you go on market cap view on here, then you can see here is when they just released a lot of new tokens, and the total number of new tokens they released was like 2/3 of all the tokens in supply, maybe even more than that. I can't remember off the top of my head. But when that happened, we did see a pretty big drop in the price, and it hasn't really recovered from that yet. But that is out of the way now. So this is the drop that happened. That's out of the way now, and I think eventually the market will kind of come to its senses about what this project is. As I said with the other projects, do your own research before you go throwing your money into it. But I still like it. And yeah, the question here talks about the token unlock, the market cap. And yeah, they're optimistic in the short, medium term. I wouldn't say short term necessarily. Markets can take a while before they recognize good things, and sometimes they will never recognize good things, and those things will fade as a result. Any opinion on RMRK? I've not heard of it, so no. But I will take a look at it at some point. Let's have a look and just see what it's called. Maybe I know the actual name for it. 280th from CoinMarketCap. Yeah, I don't know anything about it, so I'm not going to share an opinion because it would be uninformed, I'm afraid. It's part of Kusama, so part of Polkadot's ecosystem and NFTs. Yeah, so maybe I'll take a look at it. Maybe you know more than I do. It certainly looks like it's done well recently. So, well done for spotting that if you did. But there's nothing I can say about it. Finally, thanks for the crow hint. Such a nice rally since you tweeted about it, smiley face. Yeah, I think there is another question about crow, so I'll save that until we get to it before I talk about that. I know we're like an hour in and you're all waiting patiently for your questions to be answered as well. I'll try and get to them. Oh, there's the crow question, not far to go. Thoughts on inflation, currency debasement, keep up the good work. Covered that with the response to this guy. So I'm not going to go through that again. Thoughts on Crow. So Crow I tweeted about, I can't remember when it was now, maybe a month ago. I'm not sure. But Crow has shot up the rankings on CoinMarketCap. It's the thing I can compare it with the most is Binance Coin. Very, very similar. So there's a few reasons that this has rallied, and you can see the rally here. I mean, like this is crazy, and I tweeted about it somewhere around here when it was still trading. It might have been a bit higher than that, maybe like here in the 20s or so. So it's more than doubled since then when I kind of gave this signal about it. And again, like please don't just blindly follow signals I give on Twitter. I tweet all sorts of stuff. I'm very often wrong. Please do your own research. I am not like a dedicated person when it comes to offering out signals. But my opinion on crypto.com is that it's very similar to Binance Coin, right? Very similar mechanics to the token. You stake it on the platform, on their exchange, and then you get lower trading fees. You can stake it on the app and get yourself a debit card that lets you spend your crypto, and also increases your rewards from the Earn program. So kind of like a savings account for your crypto. They have NFTs, and they have just recently, which is part of why this rally has taken place, launched their own blockchain as well. So they've been put it in testnet quite a long time ago, maybe 6 months ago, and then they finally released it called Kronos. I think roughly when this happened. So I think it was at the start of this month, maybe like the 9th or something. Is when they released that new chain. And so just like we saw with Binance, when they released their chain, it rallied a lot. Just like Binance, their ecosystem is really built around rewarding token holders and keeping people from really getting rid of it and selling it in many ways, because if you hold it, then you can pay lower fees, and if you use their ecosystem, then that's very worthwhile. You can earn more money from their Earn program. You can use it with their NFTs. You can use it in their supercharger thing or whatever they call it. There's a bunch of stuff that crypto.com does in their ecosystem, and the token is just really well designed. And there's just been several catalysts recently that have led to this move up. So yeah, in terms of anyone who's like watching this and thinking, oh, should I invest now? My opinion would be no. It's just made it into the top 19 on CoinMarketCap, actually, which is really cool. I said that it could hit top 20, top 30, but yeah, 19 is really pretty incredible. I would say it's a bit risky now at these price levels. I'd probably wait a little bit for it to cool off. That being said, if you do buy it, you may as well use it. This is something I kind of believe in some regards with all cryptocurrencies, right? And stocks even. You invest in what you know and what you use. And I would say that with crypto.com, it's one of those things that's probably worth using. If you're going to go through the effort of buying this to speculate on the price of it, then you may as well go and get yourself a crypto.com card or use their exchange for trading some of the coins that you like. Or whatever it may be, and actually benefit from the ecosystem in the way that the token is designed. That's what I would say is if you're gonna invest in it, then I would actually look at the ecosystem and see, well, could I be getting more from this rather than just that, because it's kind of like a yield in many ways, right? Like if you use their Earn product, you earn interest on your cryptocurrencies that you have in their wallet, based on how much Crow you've got staked. So it's kind of like a dividend yield that you're just constantly getting paid for having that crypto.com token in your possession. So that's the only thing I'd say. But anyway, be careful. You know, please don't just take my word for it. Actually, do your own research. I really have to stress that, because there's so many people out there who just kind of shill cryptocurrencies, especially, but even stocks, kind of blindly towards their audience. And misleading people is not what I'm here for. So yeah, take your time, do your research. There's no rush, right? You're not going to miss the boat. This isn't the next Tesla or the next Ethereum or the next Bitcoin. It doesn't matter even if it is. You need to be sure about what you're investing in before you dive into stuff. Someone's asked about Rivian. Rivian or Neo, which can I choose for the short term? I actually replied to him asking him to define short term, and then ended up responding here. So he views short term as 6 months. I would say short term is more like a year in investing generally. But for 6 months, I would definitely not be buying either of them. To be honest, I think the situation in China is still too unstable, even if you like Neo and think Neo is undervalued. And Rivian is, I think, pretty clearly overvalued at this price. And I hope it stays that way, because Ford can make lots of money off their shares that they have in it. But would I be buying Rivian directly at this price? No. Honestly, it needs to come down substantially from here. I think only at around $100 to $110 is Rivian really something that I would consider investing in. And I've wrote a pretty long post on eToro about it, so if you haven't read it, go check it out. I still totally believe in what Rivian are doing. I still believe that they will eventually justify these kind of valuations. But right now, I do think that it's incredibly risky. It really is very risky, and that when their next earnings comes around, we could see a pretty substantial fall in the price if it hasn't kind of corrected itself a bit more since then. I mean, even when even if you compare this with the likes of Tesla and the other EV stocks, even the smaller ones, it just doesn't look very good for Rivian at these valuations, I don't think. But I love their product. I love the company generally, but I wouldn't be buying it here. What is the opinion about Bitcoin? I don't know. What is the opinion about Bitcoin? Good question. My opinion? My opinion is still that Bitcoin. I mean, I think this little correction we've had over the past couple of days is quite healthy for Bitcoin. Back down to test the moving average. I'll go ahead and show you on the chart just because I have it open. So here is my Bitcoin chart. And as you can see, like it's come down here, it's tested this level, and we seem to be kind of holding out here, just below this Fibonacci level as well, and also a lot of volume at this level. So really, it's going to kind of probably try and hit this, and then maybe it will come down and retest this and just bounce in this range for a while between like 54 and 60k. Maybe it will hold on to this level and come pop back up above 60k and just hold out here for a bit before we move forward. But the point is that I think that long term, the trajectory for Bitcoin still looks pretty good overall, I would say. Yeah, so I'm still bullish on Bitcoin. I'm still willing to hold it into 2022, especially with what's going on with inflation and stuff. Again, this is another way, a good method of trying to hedge that out. And I think Bitcoin has proven itself a bit more over the past 4 or 5 months as a reasonable hedge against inflation. Whereas in the past, it wasn't doing that quite as much as people hoped it would. I think it's proving that there is some real value to holding on to Bitcoin as a hedge against inflation. Beyond that, I mean, there's not that much I can say. I'm not one for price targets normally, but I did say at the very start of the year, 100k by the end of the year could be possible. Again, you got to add or minus a month from that, just in terms of room for error. You could also add or minus 10 grand to that in terms of room for error. But that was a rough target that I had at the start of the year, and I still think that it's possible that we can do that. Maybe not as quickly as I hoped, but I still think that Bitcoin's got further to run, probably. But it may consolidate here for a little while before it does that. You say you like orange and your red candles are orange. Yep. Yeah, orange is really my favorite color. Okay. Hi Jay, there are many undervalued companies in China, but you seem to be investing in Xinyi, only to be investing in Xinyi. Is it because of the uncertainties related to Evergrande or regulations, or do you just believe that companies like Baidu, Zep, Xiaomi, Alibaba are worth investing in? I mentioned this briefly during my call. I think it's a little bit like a trap in China to some extent. Who's going to win the F1? It's a little bit of a trap, I think, in China at the moment. A bit of a, you know, it's luring investors in, and I can understand why, because the valuations for some of these companies are really looking good. And I think that you could even say that the kind of clampdown they had on big tech, especially, has really kind of toned down recently. But there's a lot politically going on in and around China, not just with Evergrande and their economy, which has definitely been struggling a bit more over the past couple of years. Partially because of COVID, partially because of the shipping stuff and people onshoring goods again, and also because of the relations with Hong Kong and Taiwan as well. The semiconductor situation, all of these things are kind of playing a role. I said a while ago, I don't know if I've actually said it publicly, but I talked about it with my girlfriend, and some other people, that I think part of the reason that the US decided to withdraw from the Middle East and from Afghanistan is because they see a looming kind of primarily economic, but I mean just general threat of China kind of pushing into Taiwan and Hong Kong, and continuing to build up in the oceans in the area as well, and also from Russia, especially because of the fuel situation in Europe. Russia's providing everyone with natural gas, and we've seen reports of troops gathering near the borders of Ukraine and stuff. And Russia, I think both Russia and China are always looking for opportunities to kind of push out a bit. I'm not going to dive too deeply into my opinions of the countries involved. I'm going to try and avoid that political situation. But in terms of investing, I think that those are good reasons to be cautious about investing in those markets. And sadly, the same is also true of Taiwan and Hong Kong, and some of the other geographies in and around that area. I think that there's significant risk of, if not conflict, then if not conflict, then at the very least, a lot of tension, potentially tariffs, potentially, hyping up trade wars. That there's a lot that can happen there politically, and I think that really, for me, is the core risk of investing in that region at the moment. There's just a lot going on, an awful lot going on. It feels a bit like a kind of Cold War situation is sort of brewing, which is a real shame, to be honest, because I mean, to be honest, I think the planet's got bigger problems than trying to take bits of land off each other. But that's my politics leaking out again. Yeah, so that's my opinion of it, and I understand probably I'm going to have viewers in and around those regions or from those countries who are going to disagree with me, or have very strong opinions, and I understand that. To be honest, I mean, I don't live in those regions, so I'm probably not as well versed as some people. But I do think that it's an increasingly tense situation, to be honest. And if there's one thing markets don't like, it's uncertainty. Almost at the end of these questions. I know it took a while. Look, we've got like 5 more to go. Do you think there will be a market crash since Michael Burry, there's the guy who I was talking about earlier from The Big Short, is selling his stocks and saying there will be one soon? Well, actually, he sold out of a lot of his short positions recently. He was short on Tesla, he was short on ARK Invest. What else was he short on? I can't remember, but he sold out of them recently. So maybe he's backtracking a bit. Are you protected against a big correction? No, I'm not protected against a big correction. I'm somewhat protected against most corrections that I could see happening. It's impossible to be protected against correction unless you're, you know, in an insanely. I mean, even then, I don't think there's any way of ever being fully protected against corrections in markets. To be honest, I think it's impossible, really. Even if you're just like 100% short, are you really protected? Not really, because you're paying a fee to be short, and you might still be short the wrong things, and not gain as much as you should. So yeah, I covered this earlier in some of the other questions. I'm not going to elaborate before that, but generally speaking, yeah, I'm aware of what's going on. I watch things carefully, and I do my best to try and mitigate. But I'm also, as I said, pretty aware that trying to avoid these situations entirely is somewhat impossible. Why don't you buy Rivian? Covered that a bit earlier. I think it's overvalued. I also own an awful lot of Ford. Ford is the biggest position in my portfolio. It's around close to 10%. I think it's about 9.5% of my portfolio, somewhere around there. And Ford own roughly 10% to 12% stake in Rivian. As far as we're aware, they might have sold it by now. Who knows? So, there's really no point. I already have exposure to the growth that we've seen. If it holds its price, then that's great because it means that Ford will benefit substantially. We're not talking small amount of money here. We're talking, billions and billions of dollars that Ford will be benefiting. And their market cap is only like 65, 70 billion. So, I'm exposed to it. I'm pretty happy with the way I'm invested there. Of course, do I regret not buying any Rivian at IPO? A little bit. I thought it was going to outperform the targets everyone had. Everyone was saying it was going to be worth, 50 billion, 60 billion, 70 billion maybe. It came out and it was worth like 95 straight out the gate. And since then it's only rallied. I thought it could be worth about 95 to 100 billion. I still think it's probably worth about that. But that is still substantially lower than the price is now. So, I could have benefited a lot. I'm not going to be buying now because I think that it's not worth that much. Pretty simple, really. 3 questions. Peloton position has significantly been affected recently. What is your forward outlook given the significant drop? Yeah, I kind of covered this earlier as well. Really, I think Q1 is the first time we're going to get a real good picture. I reduced my exposure very substantially. It was my 3rd biggest position in my portfolio. It's now about my 9th or 10th, down somewhere around 1.5 to 2% exposure. So, not that much. There is still a lot of risk there. Now that they've raised capital, I am watching it. I'm kind of waiting for the price to hit something that is a bit more comfortable for me. So I've actually got the chart for Peloton open here. And you can see we're kind of holding this like $50 support level. So that's kind of where I expect it to bottom out. I actually said this before this drop even happened. So after the earnings report, while it was trading down overnight, and at the time it was priced around $64, $63. In the post I made, I said that $50 is where I'm watching for it to hold support. And it looks like it has now done that, especially with them taking that decision regarding raising more capital. So, I think there's potential for a good bounce in Peloton, but I'm not sure that I necessarily want to commit too much to that. Maybe I will once I'm a bit happier with where it is here in terms of the technical side of things. But I don't, there's still a lot of risk there for me until Q1, until we get to see how they're doing, and what the growth rate is really going to stabilize at, especially since they're turning more to a seasonal kind of subscription growth and sales. Care to join how you plan to mitigate potential impact of Fed rate increase as we move into 2022? We all know rate increase negatively impact growth stocks due to the debt payments. Yeah, I mean, he's pretty much summed it up there. So, I mean, maybe that's the reason that Peloton decided to go for equity instead of debt for raising the extra capital that they need. Yeah, I think I don't think there's going to be that much of a change. I think, to be honest, I think most companies were smart and refinanced before these things came in, and depending on the terms of their debt and the structure of it, they won't be really too affected by that. So it's really going to only affect the companies that aren't in a reasonable financial position in terms of their runway and stuff. And even then, the market still is looking for good investments. So I don't think it will hurt them too badly. I do think that the rate rise is probably going to come in like January, though, to be honest. I think it needs to as well. I think that would be the correct decision by the Fed. But yeah, I'm not super concerned about it, to be honest. I try and keep an eye on the debt situation and, how much cash is available for all the stocks that I'm investing in. And yeah, I'm not massively concerned by it because I think that the market really expects it to happen pretty soon. So to some extent, it's priced in, I think. Okay, well, almost done. Thanks for another great year of profits. Wondering what would be the best way to take out some profits without significantly affecting and disconnecting the portfolio allocation. Yeah, this is another tough one. I also talked about this in my post on eToro a while ago. So honestly, the best you can do really is to just try and take out of everything somewhat proportionally. So take out 10%. If you want to take out, let's say you want to take out 50% from your copy, then you should probably try and close roughly 50% of my positions. But try and do that in a way that skews towards the higher weighting positions so that you keep exposure somewhat the same as mine. So I guess essentially you need to go onto my portfolio, take a screenshot of how much I've got invested in each stock, and then start removing funds, right? And you remove a bit from everything and just keep working your way down until you get to the amount you need. It's kind of tedious. It's not ideal. But there is really no better way of doing it. That's the way that's going to make sure that your portfolio remains somewhat diversified while it then starts resyncing. Yeah, again, not ideal situation, but that's all I can really advise. Two more questions. What are your thoughts on Jumia Technologies? I still like Jumia, but I am a little bit concerned at their struggle to increase revenue recently at the same rates that we've seen from a lot of other major kind of e-tailers, I guess. They've definitely slowed down in the past year or so, and it's tough to say what the cause of that is really. But I've got very, very little exposure to it, so I'm kind of happy to just sit on that and see where it goes for a bit longer. We'll see. I monitor it on earnings and try and keep an eye on it. And it has been underperforming, but I'm not sure I want to give up on it quite yet, just because I think the potential is really there for it. What's your view on Logitech? I see you have Corsair in your portfolio, but not Logitech. Yeah, I have Corsair because I think that they're just much more pure play on gaming. I think that they're massively undervalued. I think they are cheaper than Logitech, realistically. Logitech, I think, benefits a lot more from sales of general keyboards and mice and stuff, peripherals for, offices and home offices and things like that. And I think there is a very real kind of difference between them and Corsair. Corsair has also been impacted a lot, obviously, by the whale shareholder that they have, Eagle Tree Capital, off the top of my head. Yeah, I know there's 3 more, but I did say at the very start that I'm not going to refresh it. So if those people want their questions answered, they're going to have to come onto the Twitch stream and ask their questions here. Yeah, so generally, Logitech, it's not like Logitech's a bad value company, but I think Corsair is really working harder to build out a real ecosystem. I mean, even if you just think about it on their components, right? You buy a keyboard, you buy a mouse, you buy a PC case, and maybe a few bits for inside your PC, some fans and stuff. All of the lighting and everything is synced. It all runs through the same suite of software. Um, it's all it's all one system, and then kind of the same with the Elgato products that they own as well, right? You buy your Stream Deck and your new Elgato webcam that just came out, and yeah, polls and everything kind of works together, right? It builds this nice smooth little ecosystem, and they're building their products in a way that does that. I think what's exciting is the opportunity for them to start moving into software more, and that's the way I see them starting to move over time. I still think there's loads of room for them to do all sorts of really cool stuff in the kind of hardware side of things. I actually think doing like a monitor mount, doing a desk, doing gaming chairs, everything around that. The stuff they've done with lighting has been incredible. I think the new camera is really good. There's a lot more stuff they can do there as well, and that will also be profitable. But just generally, I think that their branding and the kind of the target market that they're going for is significantly different to what Logitech goes for. I mean, certainly Logitech is not competing really with the Elgato side of things. Of course, they're competing on the gamer side of things, but even there, like Logitech, is anyone buying a Logitech PC case? Are Logitech actually doing anything internally in the PC? Do they make RAM? Do they make graphics cards? Do they make water cooling systems? No, not really, is the answer to all of those. They're much more in the kind of peripheral space. So they are different companies, and yeah, I just prefer Corsair of the two. Right, I'm going to scroll up to the chat, or maybe I should just start here and make people ask again, because maybe some people have left. It's hard to say the best way of doing this, because I obviously want to make sure that I try and answer everyone, but I'm also very well aware that these chats are really old now. And I think it's easier for people on YouTube to follow along if I'm answering them live. And I did tell everyone to wait until I'd done the eToro bit first, so I think that's how we're going to do it. I'm going to start from 5 questions ago, and then if your questions before that, then feel free to ask at AM. Okay. So the first one I'm going to pick is someone asked who's going to win the F1 championship. I think, sadly, it's going to be Lewis Hamilton again. It's going to be close. It's going to be really close. But the tracks that are coming up are very boring, and I think generally are likely to favour Mercedes. So I think Lewis Hamilton's going to win it. Max is going to come a very close second and be very sad about it, which is understandable. Let's see. A lot of people talking about my commentary about the markets crashing. Is there an option to copy you on eToro in the future? Possibly, I don't know. That's the only answer I can give you, really. Comes down to eToro, I'm afraid. It's really up to them to decide. I'm not even really 100% sure on what led them to the decision. I'm sure some of it has got to do with regulation. Some of it has probably got to do with risk. Some of it's got to do with their ability to, provide good execution for me and all of my copiers. And make sure that we're actually able to trade what we want to trade. There's a lot of moving parts as to why they may have done the copy block. And obviously I'm kind of aware of those broad categories, but I'm not sure on the weighting of them. So I don't really know. And also, I'm not sure what they're doing to address those situations. They might, for all I know, they might be working on new partnerships with liquidity providers or figuring out a new way of making the copy trading system work or something that will change things. But for the time being, I wouldn't assume that I'm going to be uncopy blocked anytime soon. So if you've got money sitting there waiting to copy me, you're probably better off investing it somewhere while you wait. What do you think about the new earn-to-play games and the combination of NFTs, metaverse, cryptos, in-game? Oof, that's a big old question. So I think generally earn-to-play is kind of bad because generally if you have to pay people to play your game, where are they making their revenue from? They must be making it somewhere, probably making it through in-game purchases. Maybe it's just a way of, acquiring users essentially. It could be some other stuff as well though. It doesn't sit that well with me. I don't really get it. Which is weird, right? Because I support basic attention token from Brave, and I get that, right? You go to a website and you earn a reward for viewing the website, basically from having advertisements thrown at you. And maybe that's how they'll do it in the games. They'll throw advertisements at you, but I don't know about you, but I'd prefer not to be bombarded with advertisements. Part of the reason that Brave is good, basic attention token is good, is that it cuts out really intrusive advertisements and gives you less intrusive advertisements. And you can turn it off if you want to entirely. And you can kind of, tone it up and down. So maybe if games move in that direction, then I could see it working. But I'm not too sure on it, to be honest. It kind of gives me similar vibes to some extent as free-to-play games as well. I'm not a massive fan of free-to-play as a concept, and these idea of like pay-to-win games or even like all the skins and stuff. I don't think it's really that healthy. It kind of, yeah, I mean, there's a reason that even stock trading apps like Robinhood and stuff use gamification, and the term gamification exists, right? It's not so much really actually to do with gaming in terms of video games. It's more to do with gaming in terms of gambling and the way that it affects the brain, right? You get a dopamine hit every time you feel like you're close to winning, or every time you take a risky action and you get like a little reward. Even if it's not a big reward, just a very small reward, even if it says, "Oh, you almost won this," that actually sets off in gamblers' minds the same dopamine hit as regular people would get from winning a lot of money gambling. And so those mechanics and stuff I don't like as well. And I think there's a lot of that in and around the crypto space, and I'm not too keen on it to be honest. So I probably wouldn't invest in it. Whether or not it will do well, who knows? It probably will. Sadly, a lot of these things do well, even though they're generally, I think, on the whole, actually quite bad for society. There were so many parts of this. NFTs, yeah, loads of potential in NFTs. I think we're yet to really see the true potential of it, though. There's a lot of people make a cool picture and sell it for extortionate amounts of money. And I think part of that is that the markets are very easily manipulated. There was an example recently of someone who essentially took out a cryptocurrency loan for like a couple of hours with almost no money for millions and millions of dollars. They took out this huge loan by putting up some collateral, and then because it was only for a couple of hours, they could borrow an extremely large amount of money through DeFi, totally unregulated and stuff, which is not necessarily a terrible thing. But the point is that they used that money to buy a token off themselves. they used it to buy an NFT, non-fungible token, off themselves to raise the price of the token on the markets, so that on the market it looks like someone else has bought this token for a really large amount of money, so clearly it's worth more money, so that buyers would then look at it and think, oh, this is clearly worth lots of money. And that's what you get when something's non-fungible. Sadly, I mean, the same kind of thing happens in the art world. There was a really good documentary I watched not that long ago about this kind of thing taking place in the art world through auction houses and stuff. And that really, it comes down to like a handful of players with a lot of money that potentially sometimes work together to manipulate the price of things. So it's a dangerous place to be investing, I think. It's good that it's kind of democratized and that anyone can do it now. It's not quite the same as the art world. I do think that digital ownership of whatever it may be, if it's art or whatever, or music or copyright stuff or parts of a game, is a really cool concept. But I think it's really about building out the infrastructure around it to make it more transparent and make people better able to understand how much these things are really worth. But as I said, like the space overall has got so much potential for all sorts of really cool stuff. Shared ownership, I think, is actually something that's really underutilized. I think shared ownership of actual genuine art pieces in the rest of the world by using NFTs would be a really cool thing to see. But nobody really seems to be focusing on that for some reason. Everyone prefers making JPEGs. Again, not that I hate all the JPEGs. I'm a big fan of some of them, but and it's great for small artists as well. But it needs to mature. Metaverse. I talked about this a bit recently as well. I think the concept of a metaverse is kind of dystopian. I also think that metaverse is also a very broad term. It can mean anything, really, when you think about it. It just means, a universe that's not the same as the one that we're currently in, if that kind of makes sense, or the one that we perceive on a daily basis. So that could mean that if I open up a game of, I don't know, PUBG or Minecraft, I'm in the Minecraft metaverse, right? I'm interacting with it through a screen and a keyboard and a mouse, but I'm in that metaverse. So metaverses already exist, right? They're just games. They're just gaming worlds. They don't even have to be that. You could argue that Facebook is a metaverse, Twitter is a metaverse. When you're looking at your app, you're in that metaverse already. So yeah, I think massively overhyped word, a lot of confusion about what it really is and which bits of it bring value, and then huge problems in terms of what everyone's perceiving it to be, which is VR basically, and maybe AR. Huge problems in actually delivering that technology in a way that is really accessible to everyone in terms of the price, in terms of the amount of space you need and how you set it up, in terms of how it interacts with people that let's say, are missing a hand or a few fingers, or people that wear glasses, or people that are blind, or people that their head doesn't fit properly. I mean, there's a million different potential problems in how people interact with that, and it actually could be really quite bad for society in those ways. Not to mention the fact that, of course, the entire ecosystem they're building could be controlled by a single company, which is a monopoly on a scale that we've never seen before. If Facebook were to succeed, for example, I think it would be pretty horrific, pretty horrifically dystopian, as far as I'm concerned. I think we need to make sure that these things are built really genuinely democratically and in a decentralized way and aren't taking advantage of people. I mean, imagine like the pay for win mechanics in a game where you have to participate to be part of modern life, in the same way that there was the big kind of fuss kicked up about how much control Google has over advertising online, and over the browser that comes pre-installed on your PC with Windows, for example. Right, there were huge complaints about this because you can't function in modern society without using a smartphone or without using a web browser. So if someone can influence how you get into that and which ecosystem you go into, and then try and lure you into other products that are connected to it, that's a pretty dangerous situation to be in. So, ethically, I'm pretty unsure about it. In terms of investing, way too early. Needs loads more time to develop. That's what I think. Crypto's in game. Kind of already covered it, I think. You asked a lot of questions with very few characters. I applaud your ability to fit it all into such a short message. 3 more questions when you refresh an eToro. Yeah, no, it's all right. What do you think of Elm, TLM star, asterisk, correction? Don't know what it is. Probably not going to Google it. I'm assuming it's a crypto. You said the word alien worlds afterwards, so no idea. But it doesn't sound like it's something, to be honest, that's really worth my time Googling. Maybe I'm wrong. I'm sure if I am, you'll harass me about it, and then maybe I'll look at it. If there was a huge market crash, do you think cryptos would be a good hedge? Yeah, I covered that a bit earlier. I think generally, not all cryptos will be, but I think some will. I think it has to be part of a broader hedging kind of strategy, though. I don't think you can just have Bitcoin and think you're safe against inflation or against a market crash. And a market crash is different to inflation as well, right? So cryptos are good at, I think, well, Bitcoin at least, I think is good at hedging against inflation risk, but I don't think it's necessarily good at hedging against market crash risk because so many stocks like Tesla and Overstock and whoever else, MicroStrategy, are investing in crypto now. Even like Visa and some of the banks, JP Morgan, are investing in and around crypto. That you could see actually some systemic risk spreading into crypto anyway, or vice versa as well. If crypto crashes, you could actually see that influencing traditional equity markets as well. So yeah, you got to be careful. I think there's, there's definitely some protection there at the moment, but I think that protection is diminishing as crypto continues to mature. At least on that side of things. Inflation is a different story. So maybe it depends on what causes the crash. Thoughts about Rune? I don't really have any. I've never looked into it. Yeah, nothing else I can add to that. Really, I just haven't looked into it. Brookfield Asset Management. I think I saw them recently. Are they on eToro? I don't know what their ticker is. Wow, they've got a high PE. Yeah, I mean, I don't know enough about them. Again, this is one of the problems with asking questions that are so broad, is that there's just a high chance that if you're not in the kind of areas that I look at and invest in, then I probably won't know that much about it and really be able to help. Yeah, I don't know what to say, really. I mean, their revenue's growing. Their income seems to be growing, apart from maybe this year. This quarter even did a bit worse in 2020. Yeah, I don't know what they're investing in. I'd have to properly look it up. And yeah, I'm not going to do that in the middle of the Q&A, I'm afraid. Sorry. Wasn't really able to help. How do you keep track of your trades for tax stuff, capital gains? Generally, I got a bodge-podge of trades across years and exchanges, and I don't know what I'm doing with it, really. Okay, so if you are in crypto, and it's crypto specific, then I would highly recommend Coinly, and I might even spend time to find my referral code for you to use. So Coinly basically uses like APIs or just like directly looks at the blockchain, or you can import CSVs to basically import all of your transactions across all exchanges and wallets and everything. Not every single cryptocurrency, but certainly the vast majority of them. They're always adding more. Works in a wide range of companies, but obviously, check for yourself to see if it's well supported where you are. It's not too expensive. They kind of have like a free tier for if you're not doing too much as well. But yeah, I would recommend looking into that for crypto. For tax on, stocks and stuff, I mean, all I can really say is you need to get yourself, I mean, even if you're using Coinly, I would then say on top of that, if you're doing a lot and it's complex, you're probably going to want to find yourself an accountant. And the same is true with trading stocks and equities. And even if you're copy trading me, in most scenarios, it counts as your trades. Every single individual trade that I do, which is a lot, will count as your own trades because they are in your account and you control them technically. Even though it's copying what I do because it's yours, that means that probably, again, different countries, different rules. I'm no expert. Probably you're going to have to go through and do all of that. You can't just declare you held me for 4 years and then you closed me for 4 years and you made this much profit and that's how much tax you pay. That's not, I don't think, how it works in most countries, I'm afraid. So yeah, a bit of a shame, but all I can really say is try and find yourself an accountant. Hopefully, I make you enough profit to make that affordable. um, and if not, I mean, you can do it manually as well, right? Like, it's not ridiculously unobtainable, but it is more work. You can download the reports off eToro into like a spreadsheet, and then make a few columns, start figuring it out for yourself. Yeah, but I'm not a tax expert, so please don't just take my word for it and double check. I've forgotten which question I answered. Is a crash really on the cards soon? I don't think so. No. Maybe a small correction, but even that. What are your top 5 crypto projects you are currently most excited about and bullish on? Top 5. I mean, that's quite a lot. Well, I mean, I'm not going to give them in like an order because it's kind of difficult anyway. Especially since you said most bullish. I mean, I can be really bullish on something. That doesn't necessarily make it a good thing to be investing in. Even if you're really bullish, that doesn't mean that there's not risk. I would say Bitcoin, Ethereum, Polkadot. It gets more difficult after that. Probably still Solana. And the last one is a toss-up between Crypto.com, between eGold, EGLD, which is Elrond. What else? Ultra that I mentioned earlier. I really like that project. I think those are probably the main ones off the top of my head. Flow, I still really like. Yeah, I don't know. It's really difficult. Those are some off the top of my head that I like personally. I'm not super into all the DeFi stuff and NFT stuff that much, to be honest. I just think that with DeFi, there's just always going to be potential to make a slightly better version, and there's also still just a lot of inherent risk in the way that they're designed, and also in the kind of broader systemic risk that has been generated because of DeFi's existence, especially like the lending stuff. Like, you lend money to someone and you don't know what he's doing with it, right? They could then go and use that money as collateral somewhere else to get another loan, and then use that money to go somewhere else and get another loan. And if the whole crypto market does that, then we're in some big trouble, because that's essentially what caused the global financial crisis to some extent. The repackaging of debt. So yeah, be careful with those. Oh yeah, I like Chainlink. And I like Matic as well. Yeah, I mean, like there's a lot of stuff that I like. It's just hard to remember them all off the top of my head. But there's so much going on in crypto. There's really an awful lot to consider. I mentioned Loopring earlier. I just haven't really researched it enough recently. Max Verstappen's going to win. Don't be silly. Yeah, I hope he wins. I want Max to win, but I think Lewis is going to win. Sadly. Hot Holochain, any thoughts? I've never really liked it. It's been a really long time since I researched it, but I didn't like it at the time. I thought it looked kind of scammy, to be honest. But again, I looked at it a long time ago. I didn't do a proper deep dive or anything, just a kind of glancing look, and I've just never liked it. If you're going to be stuck in hospital for 12 weeks, but still had a laptop and a phone and wanted to use time to study something, what would it be? What's a good TV or movie series to binge watch? Wow. If you haven't watched Suits, I still think Suits is quite a fun thing to watch. I also think, I don't know, what have I been watching recently? I really liked The Maid on Netflix. I thought that was a really cool series. It's not very long, but it was good though. I don't know, there's loads of stuff you could watch. In terms of what to study, it depends what you're interested in. Study what you're interested in, I would say. Whatever that happens to be, the fact that you even want to study anything is pretty cool. Do you have any recommendation? I'd like to copy someone with similar ethics. I don't really, but I have seen on eToro. I mean, I'm not really like allowed to kind of say good or bad things about different PIs and recommend different PIs to people. But one thing I will say is I have noticed a lot more ethical focused investors on eToro generally, popular investors. So I think a good way of finding them if you're kind of struggling is to just type in the tags of a bunch of stocks that you think are pretty ethical, and then see who's talking about them and see what they're saying, and then look at their profiles. I've seen like 5 or 6 PIs that I've never seen before in the past few weeks and months, just by searching some of the stocks that I was looking at investing in. And some of them might not be that great. Maybe some of them are too high risk. Maybe some of them aren't performing that well. Maybe some of them, are unlikely to have the time to do really well or whatever. But I think it's a good starting point. There's definitely a lot of good ethical focused investors on eToro now. I would say. To be honest, I think it's one of the fastest growing kind of areas of popular investor on eToro. Do you know a trustworthy platform to spend cryptos? To spend it? I mean, I would probably spend it via one of the debit cards or something you can get if you're talking about spending your crypto. Yeah, I would probably go through, BlockFi, Binance, Crypto.com, whatever. And loads of different cards out there you can get. I mean, eToro's even got the eToro money card. You could technically do it through eToro. I'm not sure how widely available it is yet, but that's an option. eToro's fees are pretty similar to Coinbase and the like, so I imagine it would be worth considering at least. Although, as I said, I don't think it's really properly launched yet. So I'm a bit behind the chat, by the way. Sorry, I'm trying to catch up, but you guys just type too quickly. It's impossible. Have you ever got your own business out stock sharing? Not sure what you really mean by that, to be honest, but if you rephrase it in a way that I can understand what you're asking, I will try and answer. What do you think about currencies going so high lately? Euro, dollar, pound. Will this trend be ongoing? Question is connected with adding funds to your copy. Do you think it is important? When should we add it? I covered when you should add it right at the very start of this stream. This will be uploaded to YouTube tomorrow, so you can check it there, or you can check my post on eToro from about 3 or 4 weeks ago. That was about my exams and about copying me. So that will cover that side of things. I'm not really sure what you mean about currencies going so high. I guess you mean inflation, which is kind of the opposite, really. But I'm guessing that's what you mean. And again, like I've talked about that pretty extensively, so I'm not going to dive into it anymore. I think actually the pound and the euro, I think, are actually doing reasonably okay. I think it's the US dollar that's struggling more so. What are your thoughts on Crow as an investment for the next couple of years? Do you think $10 is realistic for next year? No. I think $10 is extortionately ludicrous for next year. I don't know if $10 is ever going to be possible, to be honest. I mean, maybe if it takes over, like, Visa, then it could be possible, but I don't think they will. So I think $10 is probably a bit on the optimistic side. Certainly for next year. I think it's difficult, right? I actually use Crow now for some of my crypto stuff, and I do like it. I do really like it. I'm not sure if I would have bought Crow if it wasn't for the fact that I was going to use one of their products. It was only after doing that I really understood the value of the token and the tokenomics and the way that they've been looking after it. But at these prices, I don't know. It seems like a pretty speculative investment. Again, as I said earlier when I covered it, I think Crow makes the most sense as an investment if you're actually going to use the things that the token has utility for. That's where honestly, that is where the real benefit comes from, because if you stake a bunch of Crow and it holds its value and it stays completely flat, but you're using its product and service for cheaper fees and for staking your other coins through their earn program to earn interest on your other coins and stuff, then that is going to make sure that you still end up with a net profit that will probably even beat inflation as well. So, from that perspective, I think it's a good investment. From the perspective of just speculating on the coin without using anything connected to it, I'd say it's relatively risky. But again, that's my opinion. You have to come to your own conclusions. Also, would like your 2 cents on Cake. I don't really use any of the swapping stuff, any of the swapping protocols. And I think they're all pretty replicable as well. I don't think there's anything really that makes any one of them significantly better than any of the others. So as an investment, I don't think it's a great investment, to be honest. Unless there's a kind of hype period like we had earlier in the year when DeFi really started to take off. It was a good investment then. But apart from that, not so much. I didn't talk about Thor and VeChain, but I'll get there. Also, I know you will be vary in answering, but what is your approximate estimation on when this crypto bull market will top? I think mainly it's got to do with how the world recovers economically from COVID, and also how the world kind of tackles some of the other upcoming problems, right? Like how some of the political situations unfold could really make a massive difference, because if people fear for the safety of their investments and of their money even and their financial system, which could happen in the hypothetical scenario of Russia doing something with Ukraine again, or with China doing something with Taiwan or Hong Kong or whatever, or if next year we see some really bad weather stuff from climate change, whether it's forest fires again or whatever, all of those things could play a pretty pivotal role, especially if governments then have to, properly bail out and spend lots of money fighting wars or trying to fix their financial system, or we see some big companies go under for, I don't know, some other unrelated thing. Yeah, all of those things can kind of play a role. Yeah. So, yeah, I guess there's that. That wasn't really a very good answer, I don't think. So yeah, I don't know. In terms of when the market's going to top, like it's going to be extended if any of those things kind of happen during the cycle, and if they happen outside the cycle, it could be the trigger of the end of the bear market, the crypto winter cycle. But it's too hard to tell. At the same time, I think the systemic risk that I kind of mentioned earlier, that's I think starting to really appear within crypto, is very scary, and most people aren't really talking about it at the moment, or looking at it even, or even aware of it. I mean, the sheer amount of market manipulation in various forms that's happening, that in many ways can't be policed or stopped or tracked, even, just makes things very very sketchy on that front, I think. So that's that could be the thing that brings it down. We'll see some sort of an economic downturn that isn't something serious enough to make people flee into crypto, and then people will sell their speculative crypto assets because they need the money, and then maybe that will be the downfall of the system when we realize that the whole thing's been built on lots and lots of debt, which would be pretty crazy. I hope that doesn't happen, but it's a possibility. So, as I said, diversify, be careful. Current opinion on Ethereum going proof of stake. Will it be good for the ETH price in the long run? It certainly will. I mean, the fees will come down substantially. The throughput will be able to increase substantially. The kind of naysayers in terms of the mining side of things will also be really good. It will actually, at the same time, probably help secure some of the other blockchains that rely on mining a bit better, because, you know, if you own a miner, you're probably still going to use it for something if you can. Yeah, I think it's just generally an all-round good thing. I think it's good for Ethereum. I think it's good for the crypto market. I think it's good for the environment. It's good for users and transaction fees. Yeah, it's just a good thing all around. Incredibly interesting to hear your point of view. Good. I'm glad you're getting some value from it. I know it's not for everyone. Time is getting on, by the way, so I probably will stop reasonably soon. Let's say by 6:30 in the UK, which is in about 20 minutes' time. I'll try and stop by them, because also my voice is starting to go, as you can hear. But I'm going to try and answer a few more. And again, like, apologies if I skipped past your question while I was doing the eToro ones. Hopefully I answered some of them while I was going through those. As a gamer, what do you think of Nintendo as an investment? They're expanding to a Disney business model with theme park collabs with Orlando, opening stores, Switch plus software sales, expanding margins. Yeah, I think it looks pretty good, to be honest. I mean, Nintendo especially, I think, you know, the stuff with Disney and theme parks and stuff, like, Nintendo have got some of the strongest IP by far, actually. I mean, when you actually compare it with the console makers, not so much with game developers, right, but with the people who actually make the hardware, or sell the hardware and everything around it, and are in charge of the whole ecosystem, which means Microsoft and Sony, and maybe Steam, kind of, for PC. None of them really have titles of their own that are such strong brands that are also family friendly. So, you know, there are some obviously big, like, key titles, like, you know, the Halo series, for example, that's kind of linked with Microsoft, and Minecraft is obviously linked with Microsoft now. But beyond that, and like, you know, Steam has got Half-Life and Counter-Strike and stuff, but like, no one really has got anything that family friendly. PlayStation kind of ish got a few things, but really Nintendo are the ones that own those key brands, especially obviously the Mario side of things. And I could absolutely see entire, like, Nintendo themed theme parks being a thing, and, you know, they could license that out, which I think would be the sensible approach to some of the major theme park companies. You know, that would be a good way of doing it, and I think that's the way that they are doing it. Yeah, and then because the IP is so strong, there's obviously a lot of room for them to build TV and other media around it. So they could build, you know, series for Netflix or whatever, or Disney. Yeah, I think there's a lot of potential there, in terms of the brand. Like, they've done a really good job of kind of taking over that sort of sector of gaming. As for what it means for the stock, I'm not sure really. Nintendo's a bit of a weird stock, to be honest. It's always really volatile. I do think that they're kind of lacking in, while they have those advantages over Microsoft and Sony, for example. Sony and Microsoft have advantages of their own, right? Sony has insane links with the semiconductor industry and stuff, and the technology that they can port over from their cameras that they make, you know, for VR and stuff that they're doing. Microsoft, similar, you know, they're invested in a lot of other areas. Their business does a lot of stuff. The cloud stuff that they're doing is incredibly cutting edge, I think, for Microsoft, and that's where their advantage lies. So, you know, if you're comparing Nintendo with those, you know, it's kind of borderline. I think if you compare it with kind of just a media company. Trying to think of a good example, because so many of them have been bought by Disney recently, and Tencent. But even if you compare it, like, directly with Disney and Tencent, I think there's a decent kind of theory there. For me, the concern is that they try and do everything themselves. You know, the world's got enough video streaming platforms now. We don't need a new one. It would be good to see them try and catch up on the gaming streaming side of things. I think that they're at risk of being left behind on that by Microsoft and Sony if they don't watch out. Yeah, I don't know. Like, there's good opportunity there. I haven't properly looked into the valuation of the company, and I would need to really investigate it. But it's kind of a good like working thesis, I think, for if the fundamentals are in the right kind of place, then it could be a good investment. Could be. But it sounds like you've done a lot of research on it though, so probably you know more than I do. But it seems like you're kind of like thinking around along the good lines. It's all about building a good ecosystem. That's what I look for in most of my investments. All about building the ecosystem, keeping users using your products and making it seamless and easy and convenient for the users to use everything through you and your platform as much as possible without being evil, which is the hard part for most companies, I think. Any thoughts about the Tether scam, coin printing, not backed, etc., repercussions on the market? Yeah, so loads of there's been all sorts of reports. I mean, people have been talking about Tether being, unbacked and unsecure for like since 2013, at least, since it started. Basically, I mean, like it was founded by Brock Pierce, who hasn't got the greatest, cleanest of records, certainly. Yeah, there was the big Bloomberg report that showed that a lot of the money is invested in commercial paper, and they've been moving their banks around, and the banks don't know where everything's invested, and it's all like offshore, and it doesn't look pretty at all. I don't use Tether, and I won't use Tether purposefully because I just don't trust it. I just don't trust it enough. And that's not to say that their competitors are perfect either. But for me, yeah, I don't trust Tether. And I do think that, again, this is part of the systemic risk that exists within cryptocurrency that, again, like people aren't really talking about. eToro is providing Delta investment tracker. Could be a solution as well. Yeah, it could be. Coin tracking, yeah, like there's a lot of applications for it. For me, Coin is the one that's most focused on actually helping you do the tax side of things specifically, rather than just tracking everything. Like it actually produces reports and stuff. But yeah, those things can work as well. Safe Moon, Doge. Now you guys are trolling me. Yeah, I mean, there's a lot of pretty weird cryptos out there that are really high risk, and if not scams, then they tread a very fine line. A lot of them. Mr. Robot. I guess that's in response to the person who is looking for something to watch. I think we're getting near the end. There's a few more questions. I'm going to answer what's left on my screen now, which is basically up to where the chat is. And then after that, I'm going to call it. Because it's been a really long time, and maybe some of you have been watching for the whole thing, but I think a lot of you haven't, and have already left, so I'm speaking to nobody. And if you're on YouTube and you made it this far, well done. I hope you learned some interesting stuff. Have you seen microwave boilers? They look promising tech. I haven't actually. No, I haven't. I'm aware of things like infrared heating. Is it infrared? Yeah, infrared heating systems. Microwave boilers. Yeah, that does sound odd and interesting. Sounds power intensive though, to be honest. Are you more a UWU or OWO? I reckon UWU. That's what I'd say. I don't know how you meant to like pronounce those because they're kind of like faces, but. Did you talk about VeChain and ThorChain? I didn't. I finally got to your comment about it. I know almost nothing about ThorChain, so I'm not going to pretend to. VeChain's a weird one. It is a weird one. It does feel like they're one of the only people really trying to focus on that space. I think some of the kind of DLT stuff, like by IBM and the like, kind of also focus on supply chain kind of side of things and tracking of stuff. So I'm not sure. I know that like companies like Maersk and stuff are experimenting a lot in this place, and Bosch and a lot of the really big companies that just move things around a lot are already kind of investing in their own systems or working with some of those DLT solutions. I haven't looked at VeChain in a long time, so it'd be interesting to see who they're working with actively. And I don't just mean like who's got a logo on their page, but genuinely, what's been announced, what real world trials and tests are they doing? But I think it's going to be a huge market for whoever wins that. And as far as I'm aware, VeChain, I mean, there was Wharton Chain that was doing it for a while. I don't really know what happened to them. But as far as I'm aware, VeChain is probably the leader uh, at the moment in terms of public blockchains doing it. So yeah, probably worth researching. I wouldn't say it's worth investing because I don't know enough about it, but worth researching. Could be interesting. Let's see. Think that's it really. Just licensed to Orlando Studios. Who's Orlando owned by? I can't remember off the top of my head. My girlfriend has bought the cat because someone very early on requested to see the cat. So there's the cat. Go, you can look at the camera. She's not looking at the camera. There you go. There's your Easter egg. For maybe I'll make that the thumbnail on YouTube. Right, that does it for now. Thanks for watching. Kind of a hilarious way to end the stream. Watch the whole stream. Going to watch it on YouTube as well. Awesome. Thanks for joining, everyone. I hope this was valuable. Of course, I'll be doing the same thing next quarter as I do every quarter. My Q3 performance update is also up on YouTube now, so if you missed that, then you can go and watch it. That's it, really. Thanks for watching, and I will see you guys again next time. Cheers.